First we'll deal with FDI and insurance. Okay. Now, any decision of the government related with FDI is always very important for you. There's a chance that in the coming year, UPSC ask a prelims question related with it. Okay. So in this budget, that is budget 21-22, only on one sector the government have increased the FDI, and that to a very crucial sector. So FDI increase insurance from the insurance sector or from the insurance industry, there have been a greater demand on the part. They were asking for a long time that the insurance cap, FDI cap, have to be increased, and finally budget 21-22 have increased the FDI from 49% to 74%. So that is the first important point you need to. This fact is very important. It's a fact, but very important fact. Okay. So FDI in Indian insurance companies. Okay. So before moving on to this concept of in this topic, have an idea. Foreign direct investment is very crucial for our economy. Okay. In simple terms, it is. For FDI means foreign investment. So it's a foreign investment, but it's a direct investment. Direct investment in the sense that, okay, it is really coming to a particular sector, and there is capital infusion into that particular sector, as well as there will be foreign ownership also. If the FDI is more than, so it's not only the foreign capital. See, foreign investment is foreign capital coming to our country. Okay, and try to understand that we as a country require huge capital in every sector. So insurance sector is a capital intensive sector. That word is very important. Okay, capital intensive sector, because insurance sector require huge capital, and currently the domestic or the Indian insurance companies is facing this capital. Okay, so this shortage of capital is affecting their functioning. So with this announcement, okay, so earlier if an Indian company want to attract foreign capital or foreign investment, they were having a limitation. Earlier their FDI cap is 49%. So the maximum investment they can bring is 49%. And there was other restrictions also, that the managerial control should be with an Indian. So all those things have been changed. Based on this, UPSC can ask a question either in your coming prelims or in the next year also, if not this year or next year. Okay. So be very clear. So this cap have been increased. So with increase in the cap, see, if a company is owning more than 51%, then definitely the ownership will be now with a foreigner. So that anything beyond 50, so 74% is a good share, and definitely there will be huge foreign investment coming to the insurance sector in the coming months. Okay, so that's it. This fact is very important. Okay, so they will trick you. They will say that the FDI was increased from 51 to 74. See, I told you sometimes. See, facts are not that important, but when a particular topic become a very prominent current affair, then fact is very important. Okay, so not all the facts are important, but facts like this. Now, if you can see that in the coming days, definitely whenever a foreign investor increase the share and an Indian insurance company become a foreign company, when an Indian insurance company become a foreign company, when the ownership changes, when the foreign investment is more than, okay, but so FDI have been increased to 74%, but with certain safeguards. So finance minister only said this. Okay, FDI have been increased to 74%, so that the foreign ownership and the control will be with the foreign company. But since insurance sector is a very crucial sector as well as a very sensitive sector, the Indian government need to ensure certain safeguards. So certain safeguards have been added along with this decision. So there can be a question on what is the safeguard being given when the FDI was hiked from 49 to 74. That is also an expected question. Okay, so why the government have increase the FDI is, one, I told you, this sector, this insurance sector require huge capital. It's a capital intensive sector, and especially after this COVID pandemic, okay, many Indian partners, okay, the Indian shareholders of insurance companies are not in a position to invest further capital. So insurance company require huge capital, and currently the Indian shareholders does not have that much of capital, especially in this COVID pandemic scenario. Okay, so this, by increasing the FDI, that capital shortage problem can be addressed. That is one reason. Second, so not all the insurance company, try to understand that, okay, at one point of time, insurance sector was completely under the government control, especially this year is where in 1972, the entire insurance sector was nationalized. I think once UPSC, this chronology that is very important, okay, but after the economic reforms, after 1991, we allowed the private sector as well as the foreign investors to have. So now there are many private insurance companies there. So there are two type of insurances there, life insurance and general insurance, okay. Life insurance, we know that, okay, LIC is life insurance. Similarly, many HDFC is having, SBI is having their own life insurance, okay. So mostly it will be the banks, okay, banks and other financial institutions, because it's all related, it's a financial sector, no? Okay, so the first reason why the government decided to increase FDI in insurances, I told you, because this insurance companies require huge capital. Second is certain companies, certain insurance companies, okay, not all insurance companies, they were facing the problem of solvency margin, okay. See, insurance company, try to understand that, okay, they are taking money. If you understand that, if you take the case of LIC, they are taking premium from you on a regular basis, and you are assuring that you will return that money, okay. And also there is, if something happened with your life, there is some insurance also, if not to you, to your family member you will get. Similarly, take the case of general insurance. Common general insurance is accidental insurance, okay. We take general insurance, for example, for our vehicles, and you have seen that, okay, if an accident happens and if any person dies or if any injury happens to your vehicle or to you, they compensate it, okay. So insurance company have a liability in the sense that the premium they are taking, they have to pay back, okay. Not everyone will get it, but whoever is required, they have to pay, okay. So it means any insurance company, if they are having good solvency margin, okay, the term is very important, okay. Every company, especially financial companies like insurance company or NBFC or any financial companies, okay, they should be solvent. Solvent means they should have good financial health, okay. They should not become insolvent, okay. So in order to check the insurance company are in good health, the solvency margin is very important, and the insurance regulator always ensures that insurance companies is having a good solvency margin, okay. So solvency margin, again they can ask you what is solvency margin, how it is calculated, okay. It is calculated based on the assets of insurance company, okay. What are their assets and their insurance liabilities. They will be having some liability, to insurance liability, okay. So by taking the difference of their assets and insurance liability, so in order to have a good solvency margin, they should have, their asset should be more than their insurance liability, okay. So certain Indian companies, insurance companies, they find it difficult, means they are not having the necessary solvency margin. So this solvency margin can be maintained by having necessary capital. So they have to infuse capital so that their assets will improve. So to do that, they require capital, but Indian companies is already facing shortage of capital. So foreign capital will address the solvency margin issue also. So so this is the reason why the government decided to increase they can ask you, okay, why the government have, even though insurance is a sensitive sector, why we are opening up insurance to foreign companies? Because see, we require, this sector will remain intact only when there is sufficient capital. And in India, insurance penetration is, this also you can add, the word is, they can ask you what is this, whenever you read about insurance penetration is very low compared to other countries, India's insurance penetration is very, very low. Insurance penetration again is calculated based on percentage of GDP. See, this percentage of GDP is very important, okay. So, in India's case, the insurance, so how insurance penetration, will take into consider the total premium paid by everyone. What is, in India, what is the total premium paid for both for life insurance and general insurance? And we will look into the, what is the percent, we will take this premium as percentage of GDP. That is how we calculate insurance penetration, okay. So, we need to ensure that every Indian citizen should be part of some insurance, either health insurance, life insurance or general insurance like. So, by doing so, our insurance penetration will improve. Okay, these are the reasons why the government decided. Okay, now this is very important. What is the, so before this FDI hike, what is the current status? Current status is, you know that before the current hike, FDI is 49%. Okay, so it's clearly saying that, okay, the current law, the Insurance Act, okay, this insurance sector is regulated by the Insurance Act, okay. The current law presently says that, okay, this is what is the current requirement. Indian insurance company has to be Indian owned and controlled. This is the current status before the change, FDI hike. That has changed, okay. So, earlier, when FDI was increased to 49, so why the government increased to only 49? Because Indian government wanted that these insurance companies should be owned and controlled by Indians, okay. So, earlier also said that, see, in the earlier condition, the Indian partner, they can appoint, the Indian partner can appoint a majority of directors and control the management of a company, okay. So, in the board of directors, by having majority of directors, they will control all the important decision will be taken by Indian partners. So, that was the condition. So, this 49 increase, so increase of from 26 to 49 happened in 2015. But when this 49% increase happened in 2015, it made a specific condition that the managerial control should be with Indians. So, that is going to be changed. So, what the government will do, the government will amend the Insurance Act, and what they will do. So, be very clear. So, in the current status, so these things will be changed, okay. So, current status or the 2015, when the FDI limit was increased to 49, it clearly said that the managerial control will be with India. And it also stated that all major board decisions, that is board of directors decision, their strategies and appointments could be done in Indian insurance company only if a majority of the Indian shareholders give their note. So, not only the FDI was 49% earlier, but the managerial control and all the important managerial decisions were made by Indians or Indian partners. But so that was, so in order to attract more foreign capital, the foreigners or foreign company will invest in India only if they feel that they are having control over the company. So this is going to be changed with FDI being hiked to 74%, okay.